Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking. ABSA is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to the program. I'm Stephen Grootes. Lots to talk about this evening. Markets, I think, still looking for direction. Gold price finally beginning to come down, which may suggest that a bit more confidence is coming into the market. We'll find out more when we speak to Chris Stuart in about 20 minutes from now. Also, of course, just looking at the conversation about money and you, and more evidence coming out today about the tightness, the toughness of the position that you're in. And there's talk of, growing confidence, lower interest rates, etc., etc., etc. The lived reality, I don't think, is that. Obviously, depends where you are. And I'm guessing here, but I think you are right to feel that you are being squeezed. We'll focus on that in just a few moments. I was struck by a report we'll be looking at in about an hour from now, and people have been trying to measure, it's quite a funny phrase, it's quite an old-fashioned phrase, trying to measure incivility. In other words, rudeness, trying to measure what happens when we are not civil to each other. And they're measuring it in the workplace, and they're able to show that, in fact, there are rising levels of incivility, so rising levels of rudeness. We are not treating each other as well as we used to. And I've been wondering why this might be. And obviously, this is particularly in the workplace. I don't know if it's your experience. I hope it isn't. It may well be. Off the top of my head, I had several thoughts. The one was we may spend less time with our work teams, so we don't spend as much time building those relationships as we used to. I'm someone who loves to come into work. I think my family loves me to come into work too. But I like to spend time with people. And I think over time that pays off. I really do. And when you remove that, I think you run into trouble. So that's the one thing. The other thought that I had was maybe in some places, not South Africa actually, but political polarization. I think we actually talk about politics quite well. It's quite robust. But in the workplace conversations I've been involved where we've been talking about politics, and I've worked in newsrooms my whole life, so there's plenty of it. I've generally been struck by the honesty, and I think also the kind of openness and the understanding. Well, yes, you might say that, but it's never really said with huge aggression. Again, you may well have had a different experience. I hope you've had a positive one. I certainly have. I know in the US, for example, people can't talk about politics in workplaces anymore, and I think that's a sadness. I think that's a problem. Here you get into an Uber, the chances are an Uber driver, if you are an Uber driver, you're going to ask the person, who did you vote for if it's election day, and you're going to have a conversation about it, and no one really sort of loses their cool in most cases. The other thing that worries me the most is that social media might have started to condition us to take a side, whatever it is. I'm going with Sundowns, you're going with Chiefs, and yes, Chiefs might win, but Sundowns is still better, is a kind of good sort of précis summary of a social media argument. And I worry a little bit that maybe, and we'll discuss this more in an hour, maybe the way we treat each other on social media is becoming the way we treat each other in the workplace. I really hope not. I'll be very interested in your experience of it. What happens when someone brings up football? What happens when someone brings up politics in your workplace? 011 883 0702 021 446 0567 and voice notes tonight, please, on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, more evidence today that you're probably right to feel poorer than you did several years ago. The long period of inflation we've seen, I suspect, has had a bit of an impact on you. DebtBusters putting out a report today showing that many people are still taking out monthly payday loans because so much of their salaries is going to pay back other loans. And particularly, I'm thinking of cars, for example. But that also means that many people, you, may not be able to pay the council what you owe them, for example. If you consider how expensive electricity has become, that's not entirely surprising. Well, a new report from DebtBusters, Benay Sager is the executive head of DebtBusters, joins us now. Benay, good evening. I think there's a feeling that's grown over the last few years that more and more of us just aren't coping, just not getting enough money to cover costs, even when you're working, when you have a regular income? What have you found?
Yeah, I think all of the things you mentioned in the prelude are true, Stephen. I think we are forever under the pressure of inflation. And of course, CPI is the number we also quote in our report. But reality is that that's an average number. And what we found is particularly lower income groups are actually feeling more pressure than what the CPI would lead you to believe. There's the ongoing pressure where we found that about 25% of all income bands after debt repayment, whatever is remaining after debt repayments, that income, 25% of that goes to paying regulated things such as electricity, petrol or transport, rates, water, and all of these things have actually been increasing at a rate faster than the CPI. And I think those two things put together, compounded by the third thing, which is that our incomes on average haven't really kept up with the inflation over the last several years. All three are really squeezing us in different directions, and that's why we are all feeling like there's actually less money, even though you may be earning more.
There's also so many people sort of literally surviving on 1 month loans. I mean, there's lower interest rates. There's supposed to be more confidence. There was. I don't know which hill it ran away to. But that payday loan thing is still very prevalent, and that's very scary.
Yeah, we found that, the period we're talking about is composed of applicants who applied for debt counseling in Q1 2025. And what we found is 91% of the applicants had a personal loan when they applied, and 37% had what we would consider a 1 month loan, or better known as payday loans. And often these are less than 8,000 Rand, so small amounts necessarily compared to personal loans, which tend to be much larger. But they're generally accessed when there is an acute need for money. And often it happens, as you say, at the last minute, hence the name, the payday loan. And we certainly have seen this jump over the last few quarters from mid-20s to, 37%. So that's quite telling, in the sense that our money is running out probably faster than it did before, and we're having to access these things just to keep ourselves afloat.
This also explains what's happening with the two-part pension system, that so many people are taking so much of their money out the moment that they can. And you would have thought, when we hear stories about people using that to pay back debt, maybe to get out of the monthly loan, the payday loan cycle, and yet there's still a huge demand for that pension pot money when it's available.
Yeah, I think the jury is still out as to exactly what that money is being used for. But of course, there will be some elements, some people who will pay down debt. We have certainly seen that people aren't paying off their debt, but rather putting it into their credit cards or other revolving credit just to give themselves a bit more breathing room and, make sure that keeps ticking. We've also seen that some of that money is withdrawn and used as cash for other purchases. It certainly has had a material impact on the cash flow behavior over the last several months. And as you said, I think a lot of the people who are eligible, who have used it, already tapped into it for financial year 26, or back in March and April. And I think it will become like a regular thing. Every March and April, certain population, certain segment of the population or a certain share will use it. The challenge, of course, with all of that is whether you replace it or not. If you're not replacing the money you're taking out, then in 10, 15 years' time, that's where it's going to hit us. And I think that's the danger in the long term.
Are there certain kinds of debt that we still see? It's not just payday, but car debt, for example. And if you don't buy a car, okay, but taxi fares are still 40% of many people's salaries.
So, Stephen, tariffs are very top of mind, as you also mentioned in your show. We actually have quite high tariffs when it comes to vehicles in South Africa, as I'm sure this topic has come up many times. And affordability of vehicles has become more and more difficult for the general consumer, particularly when you put that together with all the other pressures. And we didn't even mention previously the bracket tax squeeze that's happening on many people by not adjusting the brackets. So what we have seen is that over the past year, the share of the debt that we see that is linked to financed vehicles has gone up from 23 to 27%. And that's generally a factor of the balloon payments actually becoming larger, and a higher portion of the vehicles that we see coming to us with the balloon payments. And the reason for that is because upfront costs of vehicles are so high that a higher portion of the original debt keeps getting pushed into the balloon payment to make them affordable for the general public. And as a result, when those things are looked at in totality, it becomes much larger. So we've certainly seen the vehicle-related debt increasing over the past few years.
There's so many different things going on here. People must be feeling more and more squeezed. In the end, they have to give up on certain things, but you run out of things to give up on. You still need to buy food for your children.
Yeah, and I think you definitely see, if you look more closely to how the different income groups are dealing with it, at the lower end, a huge portion of the take-home pay goes for food. But what's being squeezed out there is actually money available for rent, as other necessities also take up, like we mentioned, electricity rates, cell phone charges, things like that have been quite constant over the years in terms of what share of our income they're taking up. So what's being squeezed out has actually been rent. So what we've seen is, particularly with younger consumers and lower income consumers, there's more pooling of resources, which is actually a good thing from a buying power perspective, but also sharing of, apartments, that's becoming more prevalent, sharing of rent and all of that. That is what's being squeezed out. And particularly, I think, any sort of retirement investments or anything that's left for insurance, that's also being squeezed out for a majority of the population. I think the danger there is that we actually don't have the room to plan for the future.
Benay Sager, thanks very much indeed, Executive Head at DebtBusters. Maya Fischer-French is personal finance journalist at Maya on Money. Maya, good evening to you. When people get into the situation, the monthly payday loan cycle, falling behind on rent, they're basically using all of their salaries often to pay back debt, virtually nothing left. The squeeze keeps getting tighter. What options are there to survive?
Stephen, I've actually been speaking to several people this week and looking at budgets and the debt. And that's exactly the question everyone's asking. What is left at the end of the month? And this is a real challenge. And Stephen, it's been a bit of a bugbear for me that there was this whole emphasis on the 0.5% VAT increase. And yes, 0.5% VAT would have had an impact on people. But the fact that for 2 years, this is exactly the segment that for 2 years have not had any inflation adjustments to their tax, to the tax tables. Their tax bill has also been increasing. And I just see that more and more the middle class are just reaching a point of breaking. And, a lot of it is going to have to be going back to your credit providers, asking for assistance. I know you've had Benay on now, and, is it about going to debt counseling? I've been having a lot of those conversations this week. Does debt counseling make sense? Can you look at ways to negotiate, with your credit providers? And it is, again, just about going back, tracking your spending, what is going where. I must tell you, bank fees. I was speaking to a woman today who's spending nearly 300 Rand a month on bank fees and didn't know. So I think a lot of it is taking ownership and going back and looking at, sometimes it's that 100 Rand, 200 Rand that's just being wasted and that you don't even realize is happening. So I think it is about going back and focusing a lot on just exactly where every last Rand is going.
I think a lot of people must feel the hole is so deep they'll never get out of it.
Yeah, and it's interesting because I was speaking to someone yesterday who, at the end of our conversation, he started off with that sort of feeling. But once he started writing down, once he started budgeting, once he started saying, oh, this is where my money's actually going, and this is the plan, he said he started to feel totally differently about it. So I think often when we feel overwhelmed, we don't do anything about it. We just feel overwhelmed, and we often just think more loans, more access to credit is the only way. We need to stop, and we need to actually start taking responsibility and action for what we're doing with our money, right now, every single day. And it is about tracking, writing down literally everything you are spending. If you are complaining that you're not making it to the month end, what actions are you taking? Are you writing down everything you're spending? Do you have control of your money? And once you have that idea, what is the plan? What are your debts looking like at the moment? Because actually, when you write it all down and you look at it and you start taking control, it's actually not for many people, it's not actually that bad. It's just these chojos that get in your head, as I say. If it's just all in your head and it's not down on a piece of paper, you start to feel overwhelmed, Stephen. So I think it is about time saying, you know what, you need to start paying some serious attention to your finances.
Maya Fischer-French, thank you so much. Personal finance journalist at Maya on Money.
The Money Show.
With Stephen Grootes.
You heard a conversation on The Money Show last night with the Harambee Youth Accelerator talking about how difficult it is for young people to find jobs. Interesting to see news from the global business services sector today and from the Business Process Enabling South Africa that, in fact, they did create thousands of jobs last year. 90% of those jobs went to young people. Reshni Singh is the CEO at Business Process Enabling South Africa. Reshni, good evening. I presume we're largely talking about call centre jobs here. What kind of services are people who are getting jobs in the sector providing?
Good evening, Stephen, to you and your listeners. Yes, the global business services sector is actually a sector that focuses on providing digitally enabled jobs. Contact centers are part of them, and they service the offshore markets, predominantly the US, the UK, and Australia.
So many customers now so many companies interact with their customers through bots. WhatsApp, AI, whatever it is, whatever you want to call it. They all just put AI on it, but it's technology has been around for a while. Is there still such strong demand for actual humans with actual voices?
Most definitely, Stephen. Absolutely. The bots actually don't have a sense of empathy, which I think young South Africans are able to. Firstly, they're extremely tech savvy, so they can work very well integrating with these bots. And then they have the added value of being able to show empathy towards clients, because when you're a customer, you obviously want somebody to be able to relate to you as a human, So I don't see this going away soon, So as much as technology is there, it's not going to take away the human touch.
Where is the demand for these services coming from? Is it possible to know which countries, the companies that are requiring these services, so in other words, which companies are using South Africans, where they're based, which markets they're serving?
Yeah, so predominantly the UK market. So a significant number of the jobs are servicing the UK market, and then we also have. So just to give you a sense, about 51% of the jobs are actually servicing the UK market, and at the moment about 32% the United States, and a very small 6% in Australia. And then there's different verticals, in terms of customers. So it's utilities and energy that's top of the list. Then you have retail and commerce, you have insurance and telecoms, and then banking and financial services that are, the service verticals in these source markets that are being serviced out of South Africa.
A lot of this is really all a product of globalization. You're a British bank, you provide a service to people living in Britain. Maybe they live in Switzerland, but they have a British bank card that works wherever they go. And the person they're speaking to is based just outside Stellenbosch, for example. But globalization may, I worry about this, Reshni, be going back. Donald Trump says he wants manufacturing jobs in the US. He will want call center jobs in the US too. Does that worry you?
Not at all, because I don't think the Americans are interested in these kind of jobs. So yes, he may want to bring it back, but to be able to get Americans to do this job is going to cost these companies a lot of money. So if you're looking at source market pricing, you'd pay 60 to 70% more in those source markets for the exact same service than you would get out of South Africa. So it absolutely does not make commercial sense for any business to want to keep those jobs onshore.
Reshni Singh, thanks very much indeed. CEO at Business Process Enabling South Africa. 27 after 6.
The Money Show.
The markets.
Chris Stewart's portfolio manager at 91. Chris, good evening. Maybe it was just me, but I get the sense that markets are kind of looking for confidence. They're still dealing with the, for now, end of tariffs between the US and China. There's still tariffs, but not the extreme tariffs we had. And you really see that through the gold price.
Yeah, good evening, Stephen. We're seeing, I guess, a return to some semblance of calm in markets. We haven't had any outrageous headlines in the last few days. The news that we have had at the margin has been positive, with trade deals being struck between the US and the United Kingdom, a tentative trade truce, at least let's call it that, between the United States and China. So, all of that, I guess, has added to some sort of sense of normalcy within markets. And as volatility has disappeared, risk assets have done a little bit better. We've seen emerging markets doing better, emerging market currencies in the shape of the rand doing better. And, equity markets not moving by numbers of percent per day in either direction, but just steadily ticking up and, continuing to put the runs on the board, all of which is not a great environment for gold. Gold has been enjoying, I guess, its status as the only asset that people have been buying of late, given that they haven't quite known what else to do. As some sort of sense of normalcy has prevailed, the gold price has sold off a little bit. And with that, we've seen in a leveraged manner the gold stocks selling off a little bit more than that.
Larry Fink's comment, I think it was yesterday, the CEO at BlackRock, that there are trillions of dollars of capital that are just not being allocated. They're sitting in cash because no one knows what to do. Do you agree with this thesis that it'll probably be at least 90 days before people know what to do? In other words, it's still about confidence.
Yeah, I mean, cash holdings have been high for some time now, ever since the interest rate cycle turned. And, all of a sudden, there was a return to be generated from cash, which hadn't been the case for many, many years. Post-COVID, and indeed even post the global financial crisis, we'd seen extraordinary monetary accommodation on a global basis, which had resulted in very, very, very low interest rates. And as a result, that risk assets had really been the only game in town. We then saw interest rates start to normalize as we saw the inflationary pulse post-COVID start to manifest. That resulted in people thinking, well, cash isn't such a bad asset, given the fact that we can earn decent returns. And we've seen over the last few years quite a lot of cash sitting on the sidelines, all typically in money market funds or similar. Some of that has found its way into bond funds over the last couple of years as people have looked at relatively low risk yield assets. But there is still a fairly significant amount of liquidity sitting on the outside. What will be the trigger for people to deploy that liquidity into potentially into risk assets and potentially out of the United States into other assets in the world, including emerging markets? That's going to be increased confidence and I guess lower volatility, a sense of a more settled global environment. And I'm not totally sure we're there yet at all.
Chris Stewart, thanks so much. Portfolio Manager at 91.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, good to hear from you this evening. Still keen to hear from you about whether you think your workplace is ruder, less civil than it used to be. 011-883-0702 and 021-446-0567. There's an index now that can actually look at how incivility, rudeness at work, affects productivity. I was struck by the conversation today by someone who's always very polite, Dr. Kgosientsho Ramokgopa, the Minister of Electricity and Energy, and he was giving a briefing because of the institution of load shedding, and of course we stage 2 load shedding until 10 o'clock tonight, and then again tomorrow from 4 until 10, and I've made the point many times. Clearly, they're trying to make sure it doesn't affect the sort of productive time of the economy largely during the day. Will affect you at home in many ways, though. And I've been thinking a little bit about his approach. And the one thing, and I say this as a journalist, as someone involved in communication, Ramokgopa has been absolutely excellent. The moment that load shedding has come back for whatever reason, almost 5 minutes later on the Eskom WhatsApp group that I'm on, and there are plenty of these media groups, there'll have been a statement a moment after the announcement saying the minister will do a briefing, and it's usually in the next couple of hours or tomorrow morning, depending on the time of day. Media do need time to organize themselves as well, television cameras, things like that. And that's great. And the other thing is that he's been, I must say, from what I can see, very honest about it. Hasn't always been the case with the electricity. But I was struck by his explanation for today, because apparently we have load shedding because there was poor planning, which is a bit like saying I got stuck on the side of the road because I ran out of petrol You're not stuck on the side of the road because you ran out of petrol. You're stuck on the side of the road because you didn't plan properly. And he's being a bit more honest than some people in some instances that I may remember occurring to me. I have to say, though, how could the planning have been that bad? I would have thought after everything that's happened around load shedding, we've got a lot better at this. You're talking about a country where almost everybody has a load shedding app, so they can plan. That's how good we've got at this. So I was a little surprised at today's reason. Poor planning.
702. Stephen is on X.
At Stephen Grootes.
One of the great features of this time of year is the National Agricultural Show, NAMPO. It's underway in Bothaville in the Free State. The president there yesterday. The focus today on ensuring farmers are able to keep producing despite all of the global shocks we've seen, the tariffs, and that our food products are suddenly, despite everything that's changed, now a lot more expensive in the US because of the tariffs that have been imposed. Yes, there's a pause, but there's still more tariffs than there used to be. Brendan Jacobs is the head of agribusiness at Business and Commercial Banking at Standard Bank SA. Brendan, good evening. Thanks for your time. A series of shocks for our farmers, I think, at the moment. What is the impact of all of this tariff disruption having on our agricultural industry and our exports?
Good evening, Stephen, and good evening to your listeners. Yes, I think it's kind of a moving target at the moment because we're seeing tariffs announced and then changed a couple of days later. But in general, there's really a global impact affecting various subsectors within our sector, and the big one, of course, being I think in America, and I think particularly if we look at in 2024, we exported around $538 million worth of farm goods to the US, with a large component, about 72% of that falling under AGOA. We know it's concentrated in specific produce, and mostly citrus, and these exports have grown in that market, quite fast. In fact, the average faster than the rest of the other markets. So there's definitely some uncertainty, but I think what we're working with our clients is to identify with industry bodies which alternative markets are there for them to exploit, and planning for such circumstance.
I mean, there are plenty of people. I mean, you sort of open a newspaper, see a column, go on a website, see a column from someone saying we need to explore other markets. And the obvious ones that come to mind are the EU and China, not so much South America. Is there anyone in government, anyone in the agriculture sector who's doing that? Knocking on the door of Europe, knocking on the door of China and saying, can we sell you more oranges and lemons, please? And these are markets we already sell oranges and lemons to.
I think what's great in the agricultural sector is the close collaboration between organised agriculture and government, and I think there's various discussions and negotiations going on. I think what's also important, Stephen, is to remain calm and to monitor the changes as they occur. Another market which you didn't mention there, coincidentally, we in agriculture export a significant component, roughly 44% into the rest of Africa, and I think that's also a market that one can explore, and particularly at Standard Bank, we have a footprint across Africa, and that's something that we're exploring.
There's plenty that needs to happen in South Africa too. I mean, we need more reliable and cheaper electricity. We need better roads to move our lemons and oranges to ports. We need ports that work. Those are things that are affecting farmers too.
Most definitely. I think if we ask the average farmer, infrastructure and all the lack or decay thereof would be one of the first things that they would say. And I think for that reason, we see our organised agriculture is working closely with local municipalities to focus on exactly that. And I think there's also some good work happening in the space that you mentioned, getting harbours and the ports into a place where there's collaboration between private and public enterprise to ensure that we can get the good produce of South Africa into the international market.
When I was growing up, there was a great line in the communities I was growing up in that farmers always complain. And I don't mean to be rude about farmers, but there's always something to worry about because so many of the factors involved in farming are outside of your control, and particularly the weather. And I just wonder about the kind of, and this is very hard to sort of assess, Brendan, but the sentiment, the vibe, the kind of enthusiasm. Obviously, people are looking at the sort of, in quotes, refugees that went to the States and all of that, and they've got nothing whatsoever to do with anyone at Nampo in any way. And yet I just wonder how farmers are feeling, because that sector has grown very strongly and has become more and more important to South Africa, and is a major part of our economy and is creating jobs when other sectors are not.
Yeah, Stephen, it's such an important thing you raised there, and I think if you look at the official, the most official indicator would be the Agbiz Business Confidence Index in agribusiness, which is actually currently, I think, at the highest levels it's been in 2 years. And I hear your comment around farmers complaining, but I can tell you, on the ground here, and specifically at Nampo over the past 2 days, I've personally experienced the sentiment to be very positive. I think our farmers are focused on producing effectively and focusing on those elements that are in their control. Yes, it is so that there's many macro elements out of their control, but I get a strong sense that there's a real positivity and a real focus, and I think we work in a wonderful sector where food security and addressing unemployment is foremost for the vast majority of the people playing in the sector. So I think, to the contrary, I think there's a lot of positivity and focus, and particularly over the past 2 days here at Nampo, it's been very evident to me.
I'm glad to hear it. Brendan Jacobs, thanks very much indeed. Head of Agribusiness at Business and Commercial Banking at Standard Bank SA.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
A series of comments over the last couple of days from the KwaZulu-Natal Premier, the IFP's Tommy Ntuli, saying that he and his provincial government will keep fighting to keep iThala going as a financial institution. In fact, he said yesterday, the money of depositors is safe. And I'll quote what he said. He said, there is no risk for them to keep their money in iThala, end quote. But the Prudential Authority has said the institution is not solvent. It was able to receive deposits, but was never a bank. It was operating with an exemption, which was then rescinded. Stuart Theobald is a financial analyst and chairman at Krutham. Stuart, good evening. Dr. Theobald, I appreciate the time. Tommy Ntuli says people's money in iThala is safe. Is he on very solid ground to say their money is safe?
Look, I don't think you could say that straightforwardly. From all of the evidence I've been able to see, the bank is insolvent. That's the view of the Reserve Bank. And indeed, some of iThala's own documents have indicated that the bank is insolvent. The only disagreement is the extent of that insolvency. So it means that there's a gap between the amount of deposits that the bank holds and the assets that it holds. And that gap, depending on which numbers you look at, ranges between 500 million and 1.6 billion rand. Now, depositors need not be fully exposed to that hole, because there might be a guarantee that will cover them. But actually, that guarantee is now another matter of dispute between the KwaZulu-Natal government and the Reserve Bank and National Treasury over who should be carrying that guarantee on his shoulders. And if Tommy Ntuli wanted to reassure depositors, the thing he could say is that the KwaZulu-Natal government accepts that it is liable for that guarantee and it will make good depositors. But it was interesting that he did not, in fact, say that. It was rather a convoluted appeal that depositors support the bank.
I mean, so the obvious question is always in these things is, where did the money go? VBS, we're still tracing where the money went. Do we know where the money went at iThala?
Look, fundamentally, banking is not complicated. You take money from depositors and you lend it out to borrowers. And when a bank loses money, it's always because the borrowers haven't been able to repay, and therefore the bank doesn't have the money to settle the depositors. So that is the story of any bank that goes insolvent, and that appears to be the story in the case of iThala, in that its loan book, which are its assets, has grossly underperformed. And again, we don't have current, real, reliable numbers on how badly it's underperformed, but some numbers suggest that about more than 40% of that loan book has gone bad, that the bank cannot recover it. And at those kind of numbers, you end up with a bank that has now got less assets than deposits, and that becomes a bank that's unsustainable.
Okay, so then It's been lent out to, I don't know, certain people, I say cynically, and we don't know necessarily who, but they're not paying it back. And I hate to say this, but this is a bank that politicians are fighting for, and so I get very cynical very quickly.
I share your cynicism, Stephen, and we've had the recent case of VBS Mutual Bank to remind us that sometimes loans are not really loans in the strict commercial sense. Sometimes they are handouts to people with whom a bank has or wants a relationship. And there's certainly concerns in the case of iThala that a similar pattern might be emerging. Now, this might in fact not be the case. Perhaps our cynicism is ill-founded. But if that's true, then the bank should open its books and be completely transparent. It should publish up-to-date numbers or properly tested with proper accounting of how that loan book is performing. And then we would be confident that the bank is able to trade effectively. But the fact that it's not putting numbers on the table, and it was interesting to listen to the Premier today talk at length of, really pleading for government institutions and members of the public to support the bank. And when I hear that kind of special pleading about the bank, I'm immediately skeptical, because a bank should need to appeal to people to support a bank out of the goodness of their heart. A bank should be able to convince the public that it can trust that bank because it's well managed and it's prudent. Now, iThala is not making the case that it's well managed and prudent, and that's concerning. If it was, then it should open its books, we'd have full transparency, and that way it will be able to recover confidence. Of course, either way, it's going to have a hole in its books, and it needs somebody to contribute capital, because that's how banking works. So you have owners of a bank who put shareholder money into the bank, and that provides a layer of protection for depositors. And iThala appears to have exhausted any such capital it had, and it needs to be recapitalized. And if the KwaZulu-Natal government is really determined to put this bank back on its feet, it should be looking at ways to recapitalize it, to recover the assets, to sort of get that loan book to perform properly, to go after anybody who is defaulting, ensure that they're blacklisted, and if there has been any fraud, to ensure that they're criminally investigated. That's the appropriate way to rebuild public confidence in a bank.
So we know that, the Premier is saying that institutions and depositors should support the bank. It should not be taking depositors' money now, as I understand it. Do we know is there council money being invested? Would it have been legal because it was never formally a bank?
Well, it operated under exemption. So the Reserve Bank had granted it a special exemption from the Banks Act. Now, there would be a grey area in terms of the Public Finance Management Act and whether municipalities were free to deposit money into the bank. It is quite feasible that municipalities could have. We don't know the details. And again, this is a problem about the transparency around the numbers that we really need to be able to make these judgments. And, until we have that, we can't be clear. Now, as you say, deposit-taking activities have been suspended. The bank cannot take deposits, and I cannot realistically see, no matter what the court processes that continue from here, I do not see deposit-taking resuming. There is no legal way that could happen. So appeals for people to deposit money into the bank are just not feasible because it can't be done. The bank is not legally permitted to accept any deposits.
Dr. Stuart Theobald, really appreciate the time. Thank you, Financial Analyst and Chair at Krutham. You're at The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to The Money Show. I'm Stephen Grootes. Still interested, and we'll talk more about this in a moment, incivility, rudeness in the workplace, the impact that it has on you. I think there's so much to talk about with this and lots of very interesting conversations to have about it. So looking forward to that conversation. We'll hear from Wendy Nola. Cracker of a story, scary story, where even reading the fine print wouldn't necessarily have helped you, a very big court judgment. And then looking forward to speaking to someone I've come to know over the years, but never in the way in which we'll find out tonight. I'm talking about Professor Samson Mampoedi. He's become an expert, quoted all over the place, of course, and very widely and correctly so. He's become an expert, and through his own academic research, in renewable energy. He's actually far more interested in biomass energy than solar energy. In other words, creating electricity from biodegrading material, organic material. But we'll talk to him about his journey, and I'm particularly fascinated by one part of it, from the University of Fort Hare to Stellenbosch. And in a way, a tale of two cities. Alice and Stellenbosch, two very different places in our national conversation. 9 minutes after 7. Good evening.
The Money Show.
Business Unusual.
Business Unusual is brought to you by Business Outsurance. Visit outsurance.co.za to switch and save today. When you go into your workplace, how do you think you're going to be met? Are you going to be warmly welcomed? Will people be polite? Will there maybe be an air of menace? Will it be a bit febrile? I find it very interesting. I mean, people talk about sort of levels of rudeness. Incivility is the phrase that they use, civil meaning to be polite in this context. But I do worry that maybe people are being less polite to each other, more rude, and as a result, they're becoming less productive too. Sipiwe Moyo is the organizational behavior specialist. Sipiwe, such a fascinating topic. Good evening. First, what exactly are we measuring here? Because civility or rudeness, it can be quite a slippery concept.
It can be a separate concept, Stephen. Good evening. And it's just a matter of it's in one range, and you can either go to the other extreme. But I'm really noticing this strange trend. It's a quiet but growing idea that respect is outdated, and in this world that we're in now, being direct is often the preferred way. Political correctness, they push back people around. When you're being decent, it's politically correct, it's being woke, and so on. And the idea is now that saying things like please and thank you is old school. Can we just get on with it? And it's an interesting idea, because now that everyone is buying into this weird structure around if someone just deserves respect and dignity, they're being too sensitive, that some kind of politeness is seen as weakness. You can get into a point where there is a tit-for-tat thing that is happening in the workplace, where you ignored me, I'm going to ignore you. There's a little bit of acts of disrespect there, I'm going to do the same, and so on. And as you rightly say in your introduction, that unfortunately leads to production loss, because how do I collaborate with someone who can't say please and thank you? I'm going to start hoarding information. I'm going to start not inviting you into that meeting. You did not invite me, so I'm not going to invite you. How do I collaborate? I'm going to hoard information as well. So all these things that we think are soft and they do not matter, they do not really foster a culture of collaboration, and eventually we can see it in the productivity.
The role of leaders. I mean, I remember as a reporter for EWN when Julius Malema came to the sort of national stage, and he would say quite often, I'm a young person, I'm still learning how to show respect. I can be rude and loud if I like. Fast forward to around 2018, I was chairing a public meeting. It involved musicians and collecting rights agencies, and there's a toxic relationship if ever there was one. And these two young guys got up and said exactly what Malema had said. I'm a young person, I'm still learning, and then were very rude to the people on the stage. I felt that he was right to be rude to them, but that's a different story. In the US, of course, well, it's Donald Trump, isn't it, who is rude to everybody and calls you to your face a loser.
Oh, absolutely. I mean, role modeling, if you think about the fact that how culture is created, it's created through role modeling. People are going to do what the leader seems to get away with. Everybody who's trying to be revolutionary will speak exactly like that, because it's a sign of power. It's a sign that you are in charge, as people say it. So people are going to do what the leader really, really tolerates. And if you start realizing that each and every person who wants mobility in the workplace, who wants promotion, who wants so on, they're always looking for cues on what they can get away with in the workplace. And leaders, knowingly or unknowingly, they set the culture, they set the tone. If a leader disrespects another one, it's regarded as being bold, it's regarded as being powerful. So literally everything is modeled from the top. So if you're a leader and you really mean it, you must call it out very early. you must really give a signal of what is okay here and what is not okay here. And people will definitely rise or fall to the level of what you tolerate as a leader. And I mean, we've seen a string in the US and in our country of people literally talking like their role model, because it's a signal that this is what matters here. This is how potential looks like here. This is how you progress here. And therefore, I'm going to do exactly that in order for me to progress.
When people say, I don't have to show you respect, or that's old-fashioned, maybe I am old-fashioned, but what I'm really hearing is, I am placing myself before you.
It really is, because you know what's funny, Stephen? All these things that are soft, that are fluffy, that are weak, when it's done to them, they recognize very quickly that it is actually rude. So it's fascinating to me when everybody say my greatest strength is that I always say it like it is. But when it's said to them, suddenly that very same thing is rude. So people really know what good behavior is. People really know how to be candid with care, because we're not saying we must create cultures where everyone is soft and we don't tell the truth. In fact, I think candor is still required, and candor is kindness. All we are saying is respect dignity, respect other people's time, don't dismiss people, don't speak over them, don't micromanage people too much, just respect them, greet them, and all of these things that suddenly, when they are doing them, don't matter. They're always the first one to knock at the HR office when it's done to them. So they know what's right.
You know, that's so interesting. That has, I'm afraid, been my experience. That, yes, people who accuse you of rudeness are, often the ones who are rude too. And again, it's very messy. Every case is obviously different. There are two other factors I'd like to explore that might also cause this, because it's one thing to blame it only on certain individuals. But I'll suggest there may be two other things perhaps that are contributing factors. The one is that we do not always work together in teams in the way we did 20 years ago. If you worked in a team 20 years ago, you probably spent about 7 hours of the same day in the same office together. You got to know each other, and you also... there was an incentive for you to put time and energy into those relationships. You would need these people. You were going to need them tomorrow. And over time, they would look after you when you're having a bad time socially or whatever. You would do the same for them. And some of that's gone. And the other is the rise of social media, and how we treat each other on social media may now be replicated in our personal relationships. And that's if that's the case, I'm actually petrified for our future.
I think that is spot on, Stephen. I think if you just think about, every human being that might not have come from the same background that you've come from, initially you've been taught that these are the bad guys, it's they, and so on. And suddenly you spend some time with that person and you realize, oh my goodness, we are quite similar than I ever thought, because you start knowing them, you start realizing that this particular person has the same likes and so on, because generally research has told us we like people who have some kind of similarities with us, right? And the working together in an office, you identify and you uncover these genuine similarities, and these genuine similarities lead to personal disclosures. You start telling this person about your family a little bit, and so on and so forth, and therefore there's trust that we gain. And so when we don't work in the office as much, we have to be very intentional about creating spaces for us to do that, so that if we have days where we're working in the office, we have to curate those days well so that we interact, so that we don't go to the office on those days, maybe it's 2 days a week, and we all work on teams, because that defeats the point. So spend time with people, both socially and at work. Social media phenomenon is absolutely spot on. That dopamine reward that we're getting from these likes and so on. And this idea that social media there's an anonymity factor, because people are also hiding, and they just develop this language where they're becoming rude, and your brain can't tell the difference when you go back to your normal life. You can regulate, but the problem is that if you're spending so much time being angry, being incivil and so on, at some point that is going to come out. You start having some weird role models who tell you that everybody else is apologetic, everybody else is weak. You must be strong. You must demonstrate a masculine type of leader, and all of these things that we're listening to in social media, we're able to then unfortunately show those things in the workplace. So it's almost like we have to be so intentional about creating a culture to make sure that we don't end up having people who are literally bringing every kind of toxicity that they are seeing out there and bringing it into the workplace.
Thanks very much indeed. Really appreciate the time. Sipiwe Moyo, such an important and fascinating conversation. The organizational behavior specialist.
The Money Show.
Consumer Ninja.
Well, our consumer ninja, Wendy Nola, of course, joining us now. And there's so many cases involving the way in which certain financial products are sold. Some of them are accounts in stores. Some of them are insurance. This is one where things actually get bundled together. And there's a High Court ruling about a company called JDG Trading. They've been bundling credit insurance into customer contracts. You may not have heard of JDG, but they're part of the JD Group. Bradlow's, Russell's, Joshua Dore, Price and Pride. And I think that these companies have some history here. Wendy, good evening. What have these companies been doing?
Okay, so they required their customers who were buying household goods, furniture and the rest on credit to also pay for credit life insurance. The idea being that if something bad happens to you, the balance on your account gets written off. Sounds lovely, but it was a bundled thing, so you couldn't pick and choose. You inherited, you were paying for credit life to cover if you were disabled or if you were retrenched, right? Which sounds lovely, but they sold it to many people, many of their customers who were receiving social grants, so they were never going to be retrenched, who were already disabled or no longer employed. So, in other words, paying a premium for something that they could never claim on. So the court found, this was Johannesburg High Court last week, found that the policy structure was fundamentally unreasonable and that it unfairly disadvantaged vulnerable consumers, of which, the customer base was made up of many vulnerable consumers. And also, and this is the crux, that it was a contravention of the National Credit Act because, and I'm not going to go into the various sections, but essentially those people who, didn't have money to waste were paying premiums, as I said, while the company knew full well that they would never be able to make a claim due to being retrenched or disabled.
So, essentially, it must just be wrong. I almost don't really care what the law says. The law is right here. But because you are being insured against something which can't happen to you. You can't lose your job if you get the insurance when you don't have one.
Exactly. And the thing is that, it's the company, it's the group's financial services arm. They are benefiting risk-free. There's no chance there's going to be a claim for those things, and those risks are built into the premium, right? So this ruling was actually an appeal brought by the National Credit Regulator, and listen to this, against another state institution, against the National Consumer Tribunal, which had previously dismissed its application to declare JDG's bundled credit insurance policy as prohibited conduct under the NCA. So the tribunal was saying, no, it's fine. We found in favor of JD Group. And so now the credit regulator brought the case before the High Court, and essentially the appeal was upheld. So the central issue was whether the company's bundled credit insurance policy contravened, as I said, various sections of the Act by being unreasonable, imposing unreasonable costs on consumers because so many of them could never benefit from as I said, these pre-existing conditions or unemployment because they were already disabled, yeah.
I'm very glad they brought the appeal. JD Trading, how do they justify this? They must have come with an argument somehow. They have lawyers too.
Yes, indeed. The ruling I read wasn't go too big on that, but essentially the bundled policy, they said, was cost effective, and admittedly it wasn't all that expensive, but you've got scale here, right? That it offered choice and complied with industry norms, and that the National Credit Regulator had failed to prove unreasonableness. by not presenting comparative pricing evidence. So those arguments were rejected by the court, which said that requiring unemployed or disabled consumers to pay for unclaimable benefits was fundamentally unreasonable under the National Credit Act's consumer protection objectives, and that their JD Group's cross-subsidization model, unfairly disadvantaged vulnerable consumers. So, Justice Mohammed was very clear. He found the practice discriminatory, as pensioners and disabled consumers paid the same premiums as others but were denied equal benefits. And he noted that the company had secured a source of revenue from these groups without carrying any risk, violating principles of fairness and consumer dignity.
Yeah,
and
so
on
this
the issue, yeah.
So I mean, this is the key thing, right? There was no risk to them. Now, even if it's R1 a customer a month, and you used the word scale earlier, we're actually talking about quite a lot of money. This basically was a source of revenue at no risk, and they were then taking this from the poorest of the poor.
Yeah, so that was the whole issue with bundling. So you shouldn't be paying for an insurance product that you have no possible chance to ever claim on. So it's an unreasonable, unreasonable, untenable situation to include cover, to make someone pay for cover that by their life circumstances they could never claim from. So and there's been, this is an issue in the South African market for many, many years now. Consumers, especially those with limited financial literacy, of which there are millions in this country due to, our past, are so often unaware of the terms, exclusions or limitations of the credit life insurance that they are purchasing. And it's pushed on them when they have opened these kind of accounts, right, retail accounts. And so the bundled nature of JD Group's policies, where insurance was a mandatory requirement for credit, let's not forget, obscured the fact that certain covers, retrenchment, disability, were not applicable to quite a number of the customers.
I made the point in the introduction. This company with these brand names, we've heard them so many times before. Bradlow's, Russell's, Joshua Dore, Price and Pride, basically buying often furniture on credit. And this particular company, JD Trading, they have form here. I mean, haven't things like this happened before?
There have been other groups. There were cases against retailers such as Lewis Stores and Net1, UEPS Technologies, which kind of point to it being a pretty systemic issue where household goods companies exploit regulatory gaps and consumer vulnerabilities. It's been a thing. The regulators have been looking at this for decades, I would say. The more of these cases that happen, hopefully we lead us to a place where the practices end.
So what happens now? The appeal was upheld. I don't know if people are going to get money back, although there's a big, strong part of me that feels they should.
Yes. So the tribunal was directed to determine the appropriate penalty on JD Group and what was termed ancillary relief. So now this is the same tribunal which previously found that JDG Trading's bundled insurance products were not unlawful, mind you. On each party, that was essentially the credit regulator and JD Group, were ordered to bear their own costs, given the public interest nature of the dispute, the court said. And it's going to be really interesting. I don't know how long it's going to take, but to see what the tribunal comes up with in terms of their recommendation for a penalty, first of all, and then what kind of relief all of those customers are going to get. And that's going to be quite a mathematical task.
So often, Wendy, when we talk to you, the takeaway is you've got to read the fine print, right? In this case, I don't know if reading the fine print would necessarily have helped you. Because the way in which these things are bundled, you don't always know. It's not always clear what you're actually paying for.
Yes, exactly. Especially the typical customer in those stores who don't have overdrafts and can't buy furniture on with their credit cards, kind of thing. And so they generally less financially literate. So they are very easily, first of all, it was mandatory.
Yeah.
And then, they wouldn't have fully understood. And even if it did apply to them, I think another part of the story, which doesn't apply to this particular case, is that they often don't really make sure that they've got paperwork around these policies and don't talk to their families about them. So the claim rate, I've never been able to get an answer of what the claim rate is, but I can tell you for sure the claims ratio would be very, very low. So this is a very nice money spinner for the companies that are offering this kind of cover.
Wendy Nola, thank you. Our consumer ninja. Such an important story, definitely worth keeping an eye on.
The Money Show. Shapeshifters.
23 minutes now to 8 the time. Well, interesting tonight to finally speak to someone who we've heard often over the last little while, someone we've had to speak to quite regularly, really because of what we've been living through. You will have heard the voice of Professor Samson Mamphwedi, the expert on electricity, renewable electricity, many times over the last few years. We are living through a fascinating transition. He's emerged as one of the nation's top experts on the subject, and he's agreed to speak to you about his career and his academic career and his time. I was fascinated by this at the University of Fort Hare and at the University of Stellenbosch. He is currently, though, the head of the Department of Science, Technology and Innovation's Energy Secretariat at Sanedi. Professor Mamphwedi, Samson, it's really nice to talk to you in this format. Good evening, and thanks for agreeing to be our shapeshifter this week.
Good evening, Stephen. A long time. I would have loved to be there, but in person. But yeah, I have some light flu, so yeah, I decided to join online. Thank you for inviting me.
No, well, we appreciate you taking the time. Thank you. Let's just start by asking you what kind of community you grew up in, where you were growing up, and from your first academic qualifications, it seems to have perhaps been in the north of the country.
Yes, so I was born in a small village called Chibulana village in the Chimbufe traditional area. I grew up there. I went to primary school and secondary school in that area. I went to a famous secondary school called Loenje Secondary School, which has a boarding in it as well. But I was walking to the school because it's quite close to my home. Then, yeah, I ended up with the University of Venda studying environmental sciences. I would have loved to study medicine. I was admitted by the then Medunsa to study medicine, but my family didn't have money to pay for my studies. And I ended up doing environmental science up to master's level. And then from there, I went on to work at the Kruger National Park Scientific Services. It was an exciting kind of a thing for about 2 years while concluding my master's. And then I moved on to University of Fort Hare to study PhD and all that.
Yeah, no, I'm going to come to some of all of that because I was intrigued when I went through your profile that you had spent time working at the Kruger National Park, and I kind of felt that I was looking at a different Samson Mamphwedi because I always talk to you about electricity. You must have found that fascinating. The background actually is around environment, and you went from there. You didn't start necessarily in electricity.
That's correct. So when I was doing my honors at the University of Venda, I did a mini dissertation on the energy matters, looking at biomass, the collection of biomass, and the use of biomass in my area, and the environmental impact and all that. So I grew that interest there, and then I went on to work at the park in scientific services as a research field assistant. And then during that time, I was busy with my master's, which basically focused on woody vegetation and elephants, the impact of elephants on wood. And then the University of Fort Hare advertised for a research fellowship with ESCOM on biomass gasification. I've always had this interest in physics. Actually, when I was at grade 12, I wrote only the physics paper and got 100% out of the physics paper. And I didn't write my chemistry. Therefore, I ended up with a 50% because they had to divide that 100 by 2. And then I went on to study biomass gasification at PhD level. And when I did my research proposal, it was more focused on the physics side of things. So at the university, they decided, no, this is physics, it's not environmental science. He's going to go and study in the physics department.
Okay, so when we talk about biomass biomass gasification. What is actually happening? We're talking about creating a gas, and we know when things biodegrade, they smell, they're giving off a gas. Are you talking about using that gas for something, and I'm presuming methane and electricity?
Yes, so when you talk about biomass gasification, it's basically a thermochemical process, which is a high temperature process, where you put in the biomass. In this case, it was wood chips inside the reactor, and then you fire the reactor. In the absence of oxygen, the wood chips kind of degrade while producing a mixture of gas that we call syngas. And part of the syngas has got hydrogen, part of the syngas has got methane, and carbon monoxide, which is one of the major gas species that is combustible in that particular gas mix. Because my system was air blown, it had a lot of nitrogen as well. So that's the process that I studied. We had an ESCOM gasifier that I had to study on the efficiency side of things and various other aspects. I ended up coming up with about 3 research products from that particular research, and some of the research products ended up, unfortunately, in China and being commercialized. Part of the research products was an efficient gasifier that is now being used in Lithuania. Unfortunately, in South Africa, we haven't yet adopted that technology widely.
So this is research you did being used in China and Lithuania, but not being used here, and it's clearly working, otherwise they wouldn't be doing it.
That's correct. So the research is being used in Lithuania, and one of the components that came out of the work is now being used in China. It's a gas analyzer that basically analyzes the gas mixture that comes out of the system, and then we take that gas mixture and then we purify it, and then we send it to a gas engine, and then we run the gas engine coupled to a generator and produce electricity. As part of my PhD, I then installed a 150 kVA system at a rural village in the Eastern Cape that was used to produce electricity to power a community bakery. It worked for some time until we had community challenges, and then it was shut down. Unfortunately, the system is still there, and it's not being used.
Sure, that must be very frustrating, Samson. Sheesh. When you're producing electricity in this way, how much energy are you putting into it? In other words, is it so I know, for example, I wouldn't be able to tell you the numbers, but you get a certain number of calories of energy per lump of coal, and then you can work out how much you'll get in terms of electricity from how much coal. When you're doing it with wood chips, when you're doing it in this way through biomass gasification, what do the numbers look like there? Are they comparable?
Yes, so we looked at it from the conversion efficiency point of view to say when you put in this much of energy that comes with the wood chips, how much of the energy within the wood chips do we convert? So we had a 300 cubic meter reactor, and we could convert 80% of the energy in the wood into gas. And then from the engine side of things, because we have losses along the way, we could convert about 30% of the 80% energy from the reactor into electricity. So our entire process had an overall conversion efficiency of about 30%. So we could convert 30% of the energy in the wood into electricity, which is very, very high and comparable to some of the systems that are like your coal boilers and things like that.
Yeah, I mean, in a way, it's the same stuff. What you're doing is removing the thousands of years of creating the wood into coal. So it's very interesting. I have to ask, Samson, you were at the University of Fort Hare while you were doing this, and it's a historic university, often in the news because it doesn't have many resources, for example. We keep hearing about students who don't have proper resources. What was it like for all of the time you were based there?
So I was quite lucky to be working under an ESCOM program. They had a program they called the ESCOM Black Researchers Development Program back then. Which is a program where they would give universities some money to fund students, and also to give them bursaries, and also to give them running expenses. And then ESCOM, through ESCOM Development Foundation, would then provide funding for the research infrastructure that they needed. For instance, in my case, there was something in the region of 300,000 that was coming for my bursary or upkeep, plus running expenses. And then ESCOM themselves spent more than 5 million rand on the research infrastructure that I had to use. And afterwards, they then supported my research, because after I graduated, I continued to do research while they were supporting my research, so that infrastructure that they established at the village for more than 5 million rand could then continue to give them benefits in terms of research outputs. Unfortunately, ESCOM has done away with that program. There was quite a number of them of us around the country. I must say, Stephen, I was at that particular point, I was one of the so-called research fellows or students who could drive around in a beautiful Audi A4, because ESCOM was paying me quite well at that point in time.
Nice to do that kind of thing, yes. It must be... So people do different things for different reasons, right? You know, you speak to some business people and they'll often say, well, I thought this was interesting, or they thought I could do this. And often people in this shapeshifter slot. But you are at the cutting edge of research about solving one of humankind's great problems, which is how to generate electricity. It must give you a real sense of purpose.
That's very correct. So... going back to my relationship with physics, growing up in the village, pre-1994, we didn't have electricity. It was a few houses in the area with electricity, less than 5 out of more than 40 houses. And we had a small bakkie at home that we would use, drive around during the day. And we had 2 batteries. We would charge the other battery for provision of electricity later at night. And I was the one putting together these lights, these DC lights from the car that we would then use at home, later in the night, and then connect that battery to get electricity. And also we had a DC TV that we could connect to that battery and then run the
We seem to have lost Samson Mampwedi there, your shapeshifter this evening. Professor Samson Mampwedi is the head of the Department of Science, Technology and Innovation's Energy Secretariat at Tsaneri, telling you about his career of really incredible research. Your shapeshifter this evening, Professor Samson Mampwedi, someone you'll have heard many, many times talking about electricity, and particularly renewable electricity, here on The Money Show and elsewhere. And Samson, we were talking to you before the line was cut about the sense of purpose, and I was asking if being involved in that research and at the cutting edge of it had given you a great sense of purpose through your career.
Yeah, that's correct, Stephen. Can you hear me now?
Yes, we can.
Okay, yeah. So I was just indicating my relationship with electricity, saying I grew up in a village without electricity pre-94, and I could, use battery from a car to power our house at home, and also to power our DC TV. So that was the relationship that I had with electricity. And when I started with research that has got to do with production of electricity, and I had to do research that involves taking energy to rural areas, biogas digesters, where you produce biogas from cow dung and things like that in rural areas, and then you use it for cooking. So I installed a number of those kind of digesters, and then I went into the solar energy space as well, where we installed a number of solar systems in homes, in schools, and also we went into the things such as your media laboratories and science labs that we designed with my research teams for for schools, for high schools and primary schools. So that basically brought in the element of education, access to education by the learners, especially in rural schools. So it's very, very fulfilling. It's work that I'm still conducting even at the moment. And obviously I grew interest in the power system, which is where we started working with ESCOM on the power system studies. And then I started to have a full appreciation and knowledge of the South African power system.
It's so interesting. I have to ask you a little bit about, I suppose, university culture. So on the one side, I've driven through Alice. I've never spent any time at the University of Fort Hare, and I don't think I've ever been on the campus at the University of Stellenbosch, where you've spent a lot of time until a few years ago. But in my mind, the two universities, maybe unfairly, symbolize very different histories in South Africa. And I wonder if you sort of felt that history during your time at them.
Yes, that's correct. And the two universities, the one is classified as a historically disadvantaged institution. Yeah. There was not much in terms of research, research equipment and things like that. But we had people who are very, very good in terms of the supervisors, the professors who were recruited to the institution. The challenge has always been infrastructure, which is part of the reasons why ESCOM at that particular point in time chose the University of Fort Hare as one of the universities that they had to support through the Black Researchers Development Program, because it came with the research equipment and funding for students. And then on the other hand, you have, and I worked at the institution for quite a long time. I spent about 13 years at the University of Fort Hare, from being an ESCOM research fellow all the way to being an associate professor. And then when I left for Stellenbosch University, that was in 2017, where I spent about 6 years. And then I then discovered that established, which is something that we know, that Stellenbosch University has got is equipped in terms of the equipment. The systems that are there are quite advanced systems. We could have research groups that are mainly focusing on research. So you go in there, you want to focus on research. You can be in your corner focusing on research. No issues around students teaching and learning and things like that. So you become more effective and more efficient when it comes to research. Even at the University of Fort Hare, I was at the Institute of Technology, dealing specifically mainly with the research side of things. But in terms of the systems, if you look at the two institutions, a simple thing, Stephen, when a student walks into the university to register, the time that they take from working in to working out is quite different. At Stellenbosch University, you register within 30 minutes, you're done, you've got a room and all that. Whereas on the other university, at Stellenbosch, at University of Fort Hare, it could take you days. It could take you 2 days, 3 days to register. A simple thing quite like that. So and this represents the two worlds in terms of the education system that we have in the country, which we need to basically deal with.
Do you think about power and electricity all the time, or do you have certain things that you do outside? I mean, do you get a chance to read other books? Are there particular sports that you watch? Are there particular things you do when you're not thinking about electricity? I think in so many people's minds, we associate your voice with electricity.
Yeah, I do a lot of things, Stephen, outside of the electricity side of things. I do read books. I have keen interest in the economy. So I read a lot around the economy as things stand. I'm busy reading a book by Professor Ben Turok, which was published some years ago, about the evolution of the the ANC economic policy. During the time when the late Minister Tito Mboweni published the South Africa's Economic Recovery Plan, I remember at that particular point in time, I was reading other books, and then I went into the details of that plan, and I reached out to him, and we had a bit of exchange around my thinking around it. Where I was saying this is not a plan, it's a framework that could lead to a plan. And I think I'm vindicated on that. And then I like sports. I like my favorite team is Mamelodi Sundowns. Many people know about that. So I'm not a Kaizer Chiefs fan. I'm a Sundowns fan. And I do a lot of I do fishing sometimes. I go out there and do some fishing and things like that. So I try to live normal life like a normal person.
Professor Samson Mampueri, been wonderful having you. Thank you very much indeed for being our shapeshifter.
Thank you, Stephen.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Great to hear from